let's kick off with what's happening on the economy, over in the economy in Kenya, and how we've seen the market perform this week. We had a trader yesterday saying he sees the economy in ICU at this stage, and of course evident in how we've seen the market perform this year and this week. Has it been a rough week for you?
Yes, thank you very much, Samantha. What we are seeing is that Kenya is at the moment being affected by two factors. One is domestic issues, another one is global issues. Internally, what we are seeing is high interest rate environment, inflation going up. We are still at 15.3%. There is talk that this could actually top out at about 18 to 20%. On the global scene, we are seeing pressure that is facing global fund managers, and therefore you have portfolio outflows, and therefore that's why we saw this week we started with a dip of 3.5%. On Tuesday, we lost about $400 million. This is the biggest dip I've seen in a single day for a long time. And it is possible that we have actually entered into a bear market, and it could be traced back to the beginning of the year. It's just that this time it seems to be settling down.
I'm sure many
election coming. Yes.
I'm sure many investors really licking their wounds after that fall off in the beginning of the week, as you say. Have you changed your investment strategy as a result?
Yes, of course. I tell you, Samantha, cash is king in this market at this point in time. Whoever has cash is going to command good yields. Bond call deposits, we are seeing they are already commanding double digits, 11-12% thereabout. Investors are preferring bonds instead of equities with focus on the short end of the yield curve. We are seeing 91-day Treasury bill edging upwards about 9%. Yesterday we saw the 364-day Treasury bill coming through at about 11%. This is very, very attractive, especially when you consider the stock market has lost about 21% thereabout in US dollar terms. Then you want to park your money somewhere where it is a bit safe. In terms of equities, I still see long-term buyers will tend to focus more on defensive stocks, the usual EABL, Athi River Mining, and the likes. But we are also likely to see bargain buyers coming in on a short-term basis to take advantage of rock-bottom prices.
Let's look at some of the stocks which in the banking sector which have been favorites of many investors. KCB being one of those. That stock rising 2.5% to 20 shillings 75 cents yesterday. Now the World Bank has provided the bank with a 9.5 billion shilling facility, and KCB applying to the CBK for that to be classified under Tier 2 capital in order to increase its customer deposits. On the back of this, we had some positive first half results from the company. It also has plans to expand into the region based on the fact that now it has more financial muscle to make deposits and increase its loan book. Is this a buy at 20 shillings 75 cents?
KCB for a long time has been the cheapest blue chip stock in Kenya, and investors are just warming up for the bank before we start entering in this sort of bearish environment. I really think that KCB is in such an enviable position because they managed to raise very huge equity capital last year. They've just gotten a new plug-in in terms of debt, just about $100 million. And I think with the withdrawal of reverse repos by the central bank, KCB will be the place where banks will be going to look for interbank borrowing. It will not come cheap, it will come expensive. It is definitely bound to benefit from this. In terms of valuation, it's still the cheapest bank, 1.5 times book, with an ROE of about 21% annualized, considering the half-year results. I expect this ROE to continue improving, especially with increased utilization of new capital and efficiency gains that are coming through from the transformation program.
Another bank stock that rallied yesterday, Diamond Trust Bank, up 2%, 102 shillings. That company reporting first half results earlier in the week. Some traders saying, though, that they were slightly disappointing versus other rivals with that top line growth of around 13%, I think it was. What are your thoughts on that bank?
I think 15% PET profit after tax was commendable considering the environment that we're in. But I understand where other analysts are coming from. We've seen the large caps are reporting a very huge earnings improvement. However, when you look at the price to book of Diamond Trust Bank is about 1.5 times with an ROE of about 25. It is looking cheap. It is beginning to look cheap.
Right, the insurance sector is also another one to look at, given the fact that we have an underpenetrated market over in Kenya. Also, the government now looking for bids from private sector players there in order to fund its civil servant insurance scheme that will that is said to cover around 220,000 state workers. Are you someone that likes insurance stocks? I mean, the likes of Pan-African Insurance is down almost 60% year to date, and some disappointing results, though, from that company for the first half.
Yeah, what you need to note from these results is that investment income came down significantly by about 60%, and it could not be compensated by the 7% increase that we saw on the gross premium. That could be attributed to what is happening at the NSE, and it definitely says that the company is highly exposed. It is a competitive industry, and therefore pricing of policy is quite cutthroat, and therefore insurance players will tend to want to play to accumulate investment income. That's how they make their money. In terms of the capacity that is coming through with new policy, especially for the for the civil
servants, 220,000 state civil servants. They're looking for it's a 6 billion shilling tender.
Yes. I think as an investor, what I'll be looking at here is the pricing. It's a very, very difficult business. Mainly at the moment, it has been benefiting the doctors and the hospitals, but the health management organizations and insurance companies have not been doing very well. So it will be a pricing issue. If they price it well, then there's good money to make.